What's up, traders? Matt from the Trade Brigade here doing a technical analysis on our broad market. So that's going to be SPY the Qs and IWM. First of all, on the left-hand side, we do have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. That will not change throughout the course of today's video. Jumping right into our SPY daily chart, I want to echo the sentiments of yesterday's video, where we're essentially just building out an area of balance. Sure, we did get a little bit of poke down below that 429, but we did ultimately close back above it, and we respected the highs that we had from yesterday. So what does that mean, right? What are we going to do about this going forward? Well, quite simply put, balance rules are in play. We have 3 days, right? We can do something like this, look below and fail, which has started to happen towards the close on today's session. So the target should now be potentially the top end because we've essentially failed to get more sellers underneath Friday's low. Remember, that was essentially the low end of the balance. That would be an upside scenario. The flip side is that we get a lower high, something that does this essentially, and then a reattempt, another breakdown underneath that 429 could lead to some more selling that takes us closer to that all-important level around 417.50, which we've been discussing over on the main channel. So that's what we've got to the downside. To the upside, if it wants to remain in balance, that's fine. We know that the breakout point is up and over 437 to get us into the daily resistance trendline, and this prior area of, it's just important, right? Because we had the top end of balance, the bottom end of balance, where the selling stemmed from. It's also pairing up nicely with that resistance trendline as of right now. The daily 200 SMA could be meeting us there for a super resistance as well. 444 up to 445, that has not changed. That's still the zone that we're going to target on the break of this 437 area, okay? So that's what we've got on our daily time frame chart. Let's take a closer look at the 30-minute just to see how this is ultimately unfolding. I don't want you to forget that this still is technically in healthy bull flag consolidation mode. If we take out our Fibonacci's from the low all the way on up to the high, what you'll remember is that at first we were nowhere close to our 38.2 on the Monday consolidation. On today's deeper pullback, certainly I'll give it that, we did get closer and actually touched the 38.2. Does it mean it's the end of the world? Does it mean we have to crash? Absolutely not. 38.2 is a respectable amount of pullback for any given move that you're measuring, right? So to me, this is healthy consolidation here, nothing out of the ordinary. It didn't really appear today, if you were watching the intraday activity, it's not like we were in free fall mode and people were panicking out of positions. It looks like it could either be, potentially some profit taking from anyone who's long down at the bottom. Looks like some people who are maybe, just slowly selling from, maybe they were long on the Friday sessions from here to here. As we really didn't get follow through on Monday, yesterday, they're starting to bail a little bit. Could be some of that. I didn't really see the panic-like activity that's typically associated with larger downdrafts in our marketplace. So I'm not saying the market can't crash, the market can't go back down towards the lows, but the type of activity that we saw today would be more indicative, of just some profit taking, maybe some selling for new positions, but nothing heavy and nothing of the sorts where people are panicking out, thinking that the market's going to go to zero. So that's what we have in our SPY for now. I would just watch this level. I would start to watch this one right here as potentially a heads up indicator pivot, if you will, roughly, let's call it 431.60, 432, that general area. You can see support, then flip to resistance right here. If we're below it, obviously that's giving us more of that lower high scenario, and the flush of 429 takes us back lower as we pointed out. If we can break back above, that's a more positive sign for the market, and then from there, you're monitoring the top end of the balance, right? So that's really what I'm focusing on here in our S&P 500s as of right now. Let's continue along and talk about the QQQ for our Nasdaq 100, the tech ETF, of course. Zooming in on this one, what do we have? Well, certainly, instead of it being a more difficult balance area to play, like we were discussing in the past, yesterday's video essentially, now we do have two equal highs and we have more relatively equal lows that we can start to consider this 3-day period right here. Yes, an area of balance. What I do think is interesting is that, we are getting a little bit of rejection from that daily resistance trend line. Remember, it is a secondary. It's not the primary like in our S&P 500. So it's not the biggest deal here. In terms of reversing the trend, sure, it's a good start, but ultimately there's a much longer way to go until the daily trend is firmly back to the upside with the primary. All I'm sort of getting at here is that this could easily just break sideways through time, and it wouldn't hold huge implications. Whereas if the S&P broke it sideways through time, it's not really the type of break that you want to see if the market's going to see massive follow through. So in my estimation, QQQ more neutral. Again, just sort of sitting here. We do have the equal highs now, equal lows. From the daily perspective, it's all about now, can we break that either, upward through price, and by that I mean resistance trendline, or are we going to do what I mentioned earlier, earlier, just break it sideways through time. And again, that's more of a lackluster type move, right? If it does break upwards, obviously that, 353, not 453, 353 level is the important one, coming for the same reasons that we discussed in the S&P 500. I know I sound like a broken record here, but not a whole lot has changed. One thing I would point out is that whenever you get periods of balance, the longer the balance goes on, the more you need to pay attention to it, because obviously the more that you go sideways, the more potential energy, remember back to your physics classes, right? The more potential energy is building in this block, that, essentially would indicate that when it breaks, we should have a more sizable move one way or another, the longer and more time that ultimately does pass. So whenever you see this, start to pay attention. All right, after 3 days, I would start to consider that important enough where a break should start to take us for some serious follow through. So the bottom end of this range is around here on the daily, just shy of 340. Let's just take a look on the 30-minute time frame to see how this is looking over here. Again, I would just point out we're still in healthy bull flag consolidation mode. If I take out our Fibonacci's from the low all the way on up to the high, what you'll notice is your 38.2 has not even been tested yet, and we're sort of rebounding and trying to get back up above in the last 30-minute session of the day. That pivot point right there, 342. Notice that was the flush point we were discussing in yesterday's video. At first, we got a bounce off of it, didn't really see major follow through underneath, and again, trying to battle back up over it towards the close of today's session would just strike me that, the sellers here aren't really that aggressive on a break of this level. If the sellers were really going to do it, if they were going to take us lower and try to make that equal low down here, and everything was going to go to hell in a handbasket in the marketplace, they should have stepped on the gas underneath that flush point, and it just simply didn't happen. It ties directly back to what I was saying in the S&Ps. If you were watching the tempo out there today, it didn't strike me as wide, spread panic in the marketplace. So I'm not really reading into that as too much of a bearish indication. So for now in the QQQ, anything that essentially stays above, let's just call it 337 for round numbers sake, as long as we're kind of above that. And notice also it was prior structure right here on that micro pullback. Again, not really the greatest structure, but it was micro pullback. It's above our 38.2. Anything that sort of respects this in here, again, you're just building out that area of balance. Nothing dramatic has changed in the market. Breakouts over the highs around that, that's now going to be a roughly 348 quarter. So breakouts up above there, or breakdowns underneath to get us closer to the Wednesday low, of last week, which was also the point of control. Again, go watch the video on the main channel if you're not familiar with what I'm talking about when I say point of control and why this level right here is so important around 329. All right, so that's your Qs in a nutshell. Still does look more bullish than bearish. Don't get that mixed up. Looks more bullish than bearish as of right now, trying to recapture that flush point here at the 342. Breakouts, as we know, 2-day highs that go 348.25. Let's wrap up our broad market now with the IWM Russell 2000 and our small caps. This one's slightly more concerning, just because if you remember what we've been discussing now, it's this sort of double bottom pattern, right? And ideally, we would have gotten the higher low pullback to form after we made it to the neckline. So it would have been, and again, this is what we would deem as quote unquote ideal, textbook, if you will. The market is very rarely ideal or textbook, so take it with a grain of salt. But in an ideal world, it would have been here, equal high, then we get the higher low pullback, then attempt for a break there. That would have been an easier thing to identify, set up, and trade. But now, given that we have this, clearly, that's a set of lower highs, correct? So there is a threat here that a breakdown of this level right here, 197 roughly in IWM, does put back into play another equal low. 3 equal lows after a lower high does mean that we have a flush point in place, which is obviously a more bearish pattern. So IWM, it's not really screaming that we're ready just yet for that full risk on move, which I've been harping on is up and over 208. Again, I know I sound like a broken record, but not too much has changed over the past 3 days. We're just eating time off the clock. And in an ideal world, as I pointed out, we would have made that equal high instead of forming now a lower high right here. So those are the main takeaways in IWM. It doesn't look like, there's going to be a massive breakdown. It doesn't look, at least as of right now, that we're headed all the way back down towards 188, the lows. If we take a look at the 30-minute time frame, and again, just to keep things sort of congruent here, we'll take out the fibs from the low all the way on up to the high. What you'll notice, we're still in healthy pullback territory, 38.2, but just from the pattern that we've been monitoring on the daily, it's not in an ideal state. All right, that's all I'm kind of getting at here. So maybe look at it as a little bit more neutral as opposed to being more bullish if we had that pattern playing out like this, as we pointed out earlier. So neutral IWM, QQQ, kind of neutral as well, monitoring that resistance trend line mainly, and in the SPYs, that's where we have an opportunity for a cleaner area of balance to be playing with. So that's going to wrap up our broad market analysis. If you learned something new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And with all of that being said, I wish you a green trading week.